Welcome to Profile Traders, and this is Reza, and you're listening to my market analysis for Monday, the November 11th. Nothing really much happened in ES here. We are still in a process of putting in very tight range with very small lack of follow through to the upside. However, zero selling interest coming into the market as of yet. Right now I do have a sell resistance zone and a buy support zone. 36 to 40 is my resistance zone and 19 to 22 is my support zone. Anything slightly bearish to happen, it is absolutely required that we do break below the 2019. Once we do that, market is left open to drop towards 2010. As for the upside, it is very overextended, as you can see it on a daily chart. This is not a new move, this is an old move, and it is starting to get kind of exhausted. And no matter how much higher it goes, there is definitely a clear-cut lack of volume supporting this move. Therefore, be very ready that when a turnaround comes in, it is going to be violent. Why? Because reactions to these parabolic moves are usually as aggressive as the initial move themselves. For a move to be sustained, you have to have a sustained angle, or I should say a reasonable angle at which price travels. 45, 50 degrees angle is good, but when it becomes parabolic like this, almost at 90 degrees angle, when they do break, the breaks are usually quite aggressive because of the nature of the price increase. So let's see what's gonna happen next, but it's definitely starting to look a little bit tired to me up here. And I also believe that a lot of good news, for whatever it is, the elections or economic data, or I should say fake economic data showing that the economy is good on paper, etc., it's already been discounted. Therefore, 3640 resistance, 1922 support, and this will give you a very nice bracket to work with. As for crude oil, this morning we did a very nice trade. As the market opened and it was going up, I called for 79.5 to 79.8 to be our sell zone, and I warned that if we do not grab it, as it will not enter our sell zone for whatever reason, then we have to grab it on the way down. So we did grab that, and there was a more than 50 ticks gain in the trade, which was magnificent, but it ended up being much more bloodier than what I was expecting. So now that whole back and forth fast up and downs are continuing, and that's the condition that the crude oil is in right now. You cannot hang into moves for too long, otherwise the counter moves will come and wipe you out. And there are several elements here that are not helping at all the situation in crude oil. We can list them very quickly and very briefly. 1, rally of the dollar. 2, major slowdown in all economies around the world. 3, oversupply. 4, a war and very likelihood of OPEC disappearing soon. And no need for anybody to go ahead and hedge themselves against rising price of oil, therefore diminishing considerably demand to buy future contracts as an upside hedge. 76.8 to 76.5 is significant support. From what I am hearing, you are having a nasty cold weather starting already in some regions on the United States, with actually record amount of early snow. And if I am right with that news hitting and oil being at extreme support and very depleted, I would not be surprised at all that tomorrow we are going to get a severe reversal on the upside, since this is now becoming very, very depleted and oversold in the very, very short term. In order to break to the upside, we will first have to clear 1780. Once we do that, we should then target 78.32. Once we get through that, 78.6, and if we can pierce through 78.6, we are going to go towards 79.5. So these are your three lines of resistance and support, 76.8 and 76.5. If we do break those two levels, we have to reassess, because it could become kind of nasty and drop straight towards 75, at which point it will become a fantastic buy. But I do not foresee that to happen. I foresee that downside from here should be kind of limited, and if anything, we are going to see a dead cat bounce rally on this cold weather news that is starting to spread around. As for our good old friend gold, unfortunately it is giving back almost entirely all the gains that it was able to gain the other day, and now we are back down to where the buyer started. And then we saw a little bit of a push back up once we did reach the bottom of this session here. Now, as long as we have to assume that support comes in now from 1145 down to 1140, that's the support zone. If by any chance we do not reach that by tomorrow, expect a push back up again tomorrow during the day session. The real resistance level comes in at 1157, past that 62, past that 68. On the way down 45, 40, and then 37. This chart follows a little bit also the euro, which the poor beast still cannot get a life, still cannot jumpstart itself on the upside. So therefore the parameter that I gave you the last time, it remains exactly in place. You are in a bracket ranging from 1.2512 to 1.2415. 15 breaks down, we should go for a test of this low at 23.58. 1.2512 breaks on the upside, we should then target 1.2588 and 1.2560. So it is kind of a undecided, very nervous market. No attraction on the upside, nobody wants to hold it for a time period, and you have to understand, why should they hold a currency where the Federal Reserve plainly tells you that they are in the process of devaluating the currency, print more, issue more debt, use the print money to buy more toxic garbage assets to put it on the balance sheet of the European Central Bank. Pretty much the same thing that Ben Bernanke did for several years, and the dollar took it in the chin until the program started to come to an end where we saw a rally in the dollar. So for now, not looking good. So let's see what comes next. This is Reza with profiletraders.com. If you wish to learn market profile trading, check out our website at www.profiletraders.com. Thank you for listening.